All right, everybody, welcome back to another episode of Inspired Investing. I'm your host, Christopher Cox, and I'm joined by Nicholas Marcano. And today we're going to be discussing a little bit of portfolio management and why it's important to you and why it can help you in your investing endeavors.
So portfolio management is probably the most important aspect of investing. It simply outlines the criteria for your investment decisions. How do you manage your portfolio? What is your risk tolerance? How do you diversify your investments to ensure that you're not too exposed to one specific sector? These are all important questions that you will have to answer when deciding what decisions are necessary to be made.
So an individual who's new to investing might have a company they want to invest in, or maybe a couple different individual companies they want to invest in, which is perfectly fine. But what you'll want to do is couple that with some ETFs, mutual funds, and some exposure to precious metals like gold, silver, and things like that. And all this is to make sure that you reduce your risk while also increasing your return over time. Some of the things that people do in portfolio management will diversify across different sectors, which there's about 12 different sectors. So it's good and healthy to have at least a portion of each of those sectors so you get that exposure.
The goal is to have a basket of investments that can weather any economic environment and give you that assurance of profitability in times of bullishness and bearishness. It is the tools at your disposal to navigate different market cycles. So what do you do in a bearish or declining market? Do you average down to reduce your overall costs on certain positions, or do you exit? What do you do in a bullish market? Do you extract a percentage of profit, or do you simply hold and wait to ride that wave or that upward trend? So the main goal of portfolio management is to try as best as possible to make informed decisions that would likely increase your chances of success.
So with that being said, we're going to move on to our habits for success. We're going to be talking about the efficient frontier. So that was founded in 1952. And what that is, it's a mathematical way of determining your portfolio and making it efficient. And what do I mean by efficient? I mean that for any given standard deviation, you can increase your returns while lowering your standard deviation in the same way. You can decide whether or not adding a specific equity or commodity to your portfolio will increase your return while also keeping the standard deviation the same or reducing it. For instance, say you have a portfolio of stocks, maybe comprised of Apple, Tesla, Costco, Walmart, Boeing, Airbnb. So you have a decently diversified basket there of value stocks and growth stocks. But say you want to maybe reduce your standard deviation, reduce your risk. What you can do is add gold. You can add different commodities, you can add bonds, or even you can keep some cash in there to see if that will reduce your standard deviation mathematically while increasing your returns over time.
With the fight against COVID-19 still taking place, we've seen a lot of sectors that have been hit hardest due to the restrictions in place to combat this disease. How do you navigate during this time is determined by your portfolio management approach. You want to make sure that during any economic environment, you put together a portfolio that allows you an assurance of profitability regardless of what is taking place in the world. So in order to maximize your returns and maintain a certain level of profitability, you may consider taking your positions out of these sectors and entering new ones, or simply reducing your cost basis and averaging down during these times of economic decline. We'd like to highlight a few key resources that we use to help us make informed decisions. One being TradingView. It's a platform that gives you a lot of investment data, ideas, and trends that you can possibly use to incorporate into your portfolio. Investopedia, for any new investor that is seeking to develop the understanding of investment and business related terminology, Investopedia can be a great source for that content. So utilize the tools at your disposal to make sound investment decisions and be an informed investor. Thanks for watching.